Hi there. Welcome to Small Business Coffee Break, the weekly video series where we take a few minutes to work on your business, not just in it. This week we learn about offshore income and when we have to report it to the IRS with Carmen Peters of Fernandez-Bergnes and Associates. Carmen has over 15 years of tax experience and is the person I trust most with tax matters. So grab a cup of coffee and let's get into it. Right, Carmen, so this was one that we started talking about before we started shooting, and I thought that kind of blew my mind. Right, so, many people here in South Florida, well, in fact, the most common thing South Florida has is that everybody's from someplace else.
Yes.
Nobody's from here except maybe my wife, who was born in Aranja and, is ninth generation American. But we come from a different place. We may have some property back home. Not a lot, but maybe it was the house our family lived in, so on and so forth. We're living here, we're renting that property over there, making some income, we might have some family money left over there, but I'm as what you described as a U.S. taxpayer, right? So I like the way that you called it that. Doesn't matter what status you have with the U.S., as far as the IRS is concerned, you're deemed a taxpayer. I'm making money over there. Why does that money matter here? Like, why am I asked that during my tax return?
Okay, so as a U.S. taxpayer, this is your tax home, the U.S. So you're taxed on your worldwide income regardless of where you made that money. You file the U.S. tax return and you report everything. So the rental income in the Bahamas or anywhere outside the U.S. included obviously, but even if it's not inside the U.S., you still have to report that rental income and the related expenses and pay taxes as if that property was here, because it is considered income. If you pay taxes in the foreign jurisdiction or the foreign country because you're required to, you get a credit here because you don't get double tax. So whatever foreign taxes you pay outside of the U.S., you'll get a credit in your U.S. tax return when we report the worldwide income. And more importantly, which often gets missed, is U.S. taxpayers that have accounts outside the U.S., bank accounts. So typically, either they left their country, they moved here, they got a green card here, but they still have their accounts in their foreign country. Well, as a U.S. taxpayer, you have to disclose all and every non-U.S. bank account that you have, or a bank account outside the U.S., especially if it had $10,000 or more during any given time during the year. If you don't, you're penalized.
So wait a minute. Right. So now I'm talking about, hey, my tia, let's just say Mexico in my case, because my tia would be in Cuba, and
yes,
that's going to be a different story, right?
Yeah.
So let's just say Mexico for an example. She passed away. I was her favorite, nephew, and she left me her home and what amounts to somewhere in the neighborhood of $20,000 in American dollars. It's Mexican, dollars, but American money, about $20,000 there. And I decided to leave that as a vacation home because it's in Cancun. It's fantastic. I'm not making any income on this. It's just there. You're telling me that now I have to tell the IRS about?
Well, yes. If that bank account you have any control of financial interest, you have to do an additional disclosure form when you file your tax return telling the IRS, I have this bank account in this country, this is the address of the bank, the name of the bank, and the highest balance that I had during the year calendar was this amount. So the IRS wants to make sure that it's not generating interest or dividends over there that you're not reporting here in the U.S.
And okay, so this was, again, not making it a business transaction to try to make it as, big a mistake as possible, right? So I forgot to tell the IRS that my tia left me this house and this money over there, which is now in my financial control because, they've moved it over to my name. The IRS finds out. What are we talking about?
Well, typically for the non-disclosure, the penalty is 10% of the highest balance that the account had during the year, or $10,000 minimum. And
so it's not the greater of the two. It's
right,
either 10 grand
or higher.
Or if it doesn't equal to 10 grand, they'll go more.
They'll go more.
Man, the IRS loves to help people. I mean, they really do. If you'd like to contact Carmen, I put all of her contact information in the description below. If you have any questions that you'd like me to ask a professional in their field so that we can get that answered over to you, please feel free to leave a comment below or shoot me a quick email. That information is also in the description below. If not, Let's grab a cup of coffee next week and we'll answer some more questions.